Okay, before we get started, just as usual, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, alright, I thought I'd start off today's class with a quick update on our trade challenge. Let's just have a quick look at a couple of things before we get started in the lesson. Incidentally, I've just triggered one trade, Kiwi dollar. If you have a look, let me get my pen up. We have got, this was my signal candle. If you look down, we're crossing, we've gone out, we've come back in, and you can see that there was my pending order. I've been triggered in the trade and I'm hoping it goes in this direction. There's my stop. Okay, so that trade is in the market. I also got another pending order sitting in the system, which is, give me a second, it's a US yen. Here we go. If you have a look at this one, there's my signal candle. You can go down, you can see that we've crossed over, and at the moment there's my pending order. So I need this to come back to get me in, and then I'm hoping to go that way. There's my stop. Okay, so this one has not been triggered as yet, but it's in the system. And lastly, I still have one open position, T2 on the euro yen. This was the signal. I got triggered there. First trade closed there, and I'm hoping to come and touch here somewhere. So I need this to go up a little bit more to get me out of that trade. Okay, so that's an update on it. Just a couple of points that I'll point out. This is the track record of every trade that I've triggered. I just got to add in that last one that I've triggered now. So I've triggered 17 trades. All right, so this one here is my Kiwi dollar trade here, and I am short on that. I'll fill in the rest later. All right, this is my net result. Remember, I am risking $20 per trade. All right, so I thought that I'll take this opportunity to explain risk reward to you with this particular strategy. Okay, because this is a strategy where the stops are constantly different. If you have a look here, this column here, this is my stops in terms of pips. You can see that I've had as small as 33, I've had a 51, I've had a 28, but they're averaging anywhere between, say, 30 and 50-ish. Okay, so it's always different. So in terms of pips, the stop is different, but in terms of risk, it's always $20 because I'm changing the volume of each trade so that I'm only risking $20. Okay, now in terms of my profit, you can see that some trades, like this one here, for example, only took a profit of $6.36. And now you wonder to yourself, well, what's the point with this particular trade over here? You risked $20 to only make $6.36. Now remember, the aim was not to make $6.36, but that's just how it turned out. All right, so let me explain to you. You can also see that I had my best trade over here made $48.24. I had a couple of 30s in there, and I've had everything in between. So 636 was the smallest. That was an actual profitable trade. Everything else was basically the minus 20s that I've lost. So what I've done, just to explain to you, okay, just to explain to you how it basically works. I've pulled out all the positive trades over here, and what I'm going to do is I'm just going to add them up really quickly. Give me one moment. So it's $189. They're all the positive trades. Now I've had 10 winning trades. So if I divide this number by 10, it gives me an average win of $18.98. Okay, so now when you look at the picture, okay, on average, I am risking $20 and I'm making almost $19. Now I still got one open position in there. All right, if I was to close that out right now, that this particular one here, that $5 turns into about $13, which puts me at roughly $20 risk for $20 profit. All right, so what does that mean? That means with 17 trades, well, 16 trades under my belt, completed trades, well, and really one of them hasn't finished yet. The worst case scenario for this trade is that I get no extra, okay, because I'll stop out at 0 for the second half. But after 16 trades, if I was to close out well, this one right now, I'm risking 1 to make 1. Does everybody understand the mathematics of what I've just actually said? All right. Now, also have a look at this number. The win ratio is 62% win ratio. So if I'm winning 62% of the time and I'm at 1 to 1, we can see that the numbers add up. All right. Now, I can tell you that if I make this sample space bigger, meaning if I come back and analyze my statement after, say, 50 trades, this particular strategy, last time I measured, gave me a ratio of around about 1, risking 1 to make about 1.2. And this number stays about the same. All right. So you can see that this odd $48 one, we're really hoping to get more of those. All right. Does everybody understand the mathematics of what I just did there? Because often I get asked about, and I've seen in lots of your trading plans, things like, I'm only going to trade a strategy that has a 2 to 1 ratio or has something like that. If I was strictly going to trade 2 to 1, well then whatever that risk is there, if I'm risking 33, I'm really going to have to make 66 pips. That'll be 2 to 1. If I'm risking 1.5, I'm going to have to make 1.5 times that amount. With this particular strategy, the fact that we are using 2 targets and we are moving our stop to break even at the trigger of the first target, you have to take this into consideration. So the way that I'm showing it to you, I've done it this way for the challenge to get this number higher, the 62%, because I believe that when you're newer to trading, we need a larger number to help us along. I can show you strategies where I only win 30% of the time, but the end P&L is much bigger, okay? Because I'm going for trades that are 3 to 1 and things like that. So where you lie as a trader is going to be a combination of how much times you need to win, all right? And then compared to the risk ratio that the strategy provides. So I've just proven to you, you can go, every one of you, I've sent this out in Twitter, all right? If you haven't received it or you're not on Twitter and you haven't received this chart, ask me and I'll email it to you. You can go and audit every single trade. They are legitimate trades, all right? I'm not making these numbers up. I'm hoping that a lot of you got that, and this is the net result at the moment, okay? I've just started one trade here, which I haven't entered because I literally just triggered it 10 minutes before we started the class. And I've got another pending order. So I've got 4 trades to go, and I have finished my 20 trade challenge, and I'll post out the results. Remember, the purpose of this challenge, if we make a profit, that's fantastic. But really what I wanted to push here is to push you psychologically, discover things about yourself, test your discipline, and find out things that we weren't aware of about the markets, etc., etc. All right. Some of you, it's going to take about 2 months to finish the challenge because you're trading at a slower rate. Doesn't matter. The goal is once you've got your 20 trades, you've got to send me the 20 trades and I'll audit them for you, and I'll give you the numbers as they stand. They should be very similar to mine. All right. If they're not, it could be a combination of cherry picking or breaking rules or things of that nature or getting things wrong. All right. And that's all part of the learning process. Any questions before I move on? The question is, so the risk reward is not per trade. Hamid, every trade has a different reward with this method because, as you can see, T1 is dependent on how far beyond the middle Bollinger Band we close. Sometimes we just close past it, sometimes we close way beyond it, all right? And also T2. Sometimes we don't hit T2, sometimes we do. That's why you're looking at my results here and you're seeing like the first trade that I did, we only made $6, but we risked 20. So that trade actually had a very poor risk reward, all right? But then you had another trade over here where we made 48 and we risked 20, and that one had a really good risk reward. So with a method like this where it's constantly changing, it's the average of the whole lot, and I can tell you that at the moment I'm running at about 1 to 1, with a 62% win ratio. So these two numbers here equals the fact that I'm ahead. All right. And if you want me to give you an idea, if I was trading, risking $20, okay, I need some thinking caps and I need someone with a calculator out there, help me out. If I was I'm risking $20. Okay, we already spoke about that. I'm risking $20, and let's say that $20 represented 3% of my account. What's my account balance, please? Anybody? What size account do I have? I'll wait for an answer. Oh, hang on. I'll do it here myself as well. Okay, I've got one number of 666. What else? I've got another of 66.7. Anybody else? Okay, 667 is the number. Okay, or 60, so we'll round it up. So that means that I'm trading an account of $667. All right. If I've made 70 bucks, what's the percentage return on my account? 10.4%. Thank you very much. So I got some emails from some people telling me things like this. Okay, I won't single anybody out, but I'll just mention some of the things that I heard because I'm sure lots of you thought about this. Okay, some people saying, "What's the point? You know, like I'm only making like $14 or things like that on a trade." The point is this, all right? If I'm risking $20, the assumption is that I'm trading an account of about 667. If I'm risking 3%, which meets the rules. I've actually returned 10.4% on my account in what? 2 weeks since the 20th of July. All right, in 16 trades. Now imagine if I add a zero to that account there, all of a sudden the 10.4% has to stand because nothing's changed. Instead of risking $20 per trade, now I'm risking $200 per trade, and now this number is $690. Okay, add another zero and you can see how it works. Okay? Does everybody understand? Okay? Someone's saying that this is only 1%. No, it's actually 10%. All right? So, and as Pat is pointing out, if you were able to reproduce this every month, that's 126% return on your account. Now, I'm not painting numbers to sway anything, to think anything crazy. All I'm doing is I'm taking the concept of trading to full complete circle. All right. We set out to do a trading challenge. These are all trades that every single one of you in the room have seen. I've called out a lot of them. Some of them that happen at weird hours of the nights. I trade pretty much constantly, so I've been able to spot them, and I've been deliberately trying to catch every single trade. Okay. A couple I caught late, but I was still able to get in anyway. Actually got stopped out on those, but doesn't matter. I still got in. And the point that I'm trying to make is I'm not ripping these numbers out of thin air. This is legitimate, okay? So the ones that have been following me, you know that this is the fact as well. And I'm just highlighting, don't get disappointed if you're only making $14 on a trade. The fact is, this is the return. If I was to do this, that's 16 trades. If I can do 16 trades every single month, it's a massive, massive thing. All right. The first thing that we need to get your rules in order. Make sure that you're disciplined enough, and when you are and you feel comfortable, then you can add another zero to your account. Or maybe not another zero, maybe just double the account. All right. So that it grows as I'm trying to describe. Okay. Any criteria on time performance for this? No, I can tell you that you can judge a strategy with around about 30 trades, okay? Or always, I say at least 20 trades, all right? So give a strategy at least 20 trades without cherry picking, and then after that you can stand back and say, no, this strategy, you'll start to get an indication if the strategy is any good or not good. All right, and you can see here this number's starting to come up, and this number is starting to get very, very close to that one. All right. Okay, enough about the challenge. For the ones that are in it, continue doing a great job. Let's get started with what's happening this week. All right, this week, big week. Okay. Probably the biggest impacting currency this week is going to be the Aussie US dollar for a couple of things. Commodities at the moment are under the pump. All right. The Aussie dollar is a commodity driven type currency. So commodities are copying it badly, and so forth is our Aussie dollar. The second thing that's happening this week, although there is no one really thinks it's going to happen straight away, but we have, where is it? Where is it? This one here. This is going to be huge, all right? If this number here surprises, whoa, if the US decides, now there is I'm getting this little trader's hunch that they could increase rates this week. Okay? Now, most people, like, the logical probability is that it's not going to happen this week. Okay? However, a couple of things that Miss Yellen said kind of left the door a little bit open. All right? If we get a US rate increase, Aussie dollar could shoot below 70, okay? Because it would be coming out of a it would be very surprising. A lot of people are not expecting it, okay? So keep an eye on that one. This one happens Thursday at the wee hours of the morning. At the very least, the statement that accompanies this number can move the market just as much. So they could say something like, all right, that they don't actually move their interest rate, but in the statement they insinuate so positively that it's definitely happening pretty much next month, and you could see the Aussie dollar drive, okay? Or you see great amount of US dollar strength, okay? So the only thing that is, there's probably better currencies to trade this interest rate decision against. I believe probably the US yen is a nicer currency to trade it again, or the Euro US. The only reason I'm saying that is because the Aussie dollar right now we're at 6 years lows. Okay, so we are into uncharted territory. We haven't been down there for a long time. Nevertheless, that doesn't mean anything. All right, we can still continue to go down. So Aussie dollar this week is going to be under the pump. Commodities, we got China over the weekend, so we could get a bit of gap in if you're holding an Aussie dollar position over the weekend. And we got what do we have? Building approvals. We had something else that was big. Where is it? We have PPI numbers, and I saw some unemployment claims. This one here. Okay, so there's a lot on this week. Pretty much the one that I should say keep an eye on in terms of data and announcements is going to be the Aussie dollar. Okay. Other than that, on the euro front, the Greece situation has calmed down a little bit. However, Greece is not out of the woods as yet. The situation there is that now they could be having another election, which is turmoil politically, which is always never good for the currency. A lot of money is moving away from the euro at the moment because of the uncertainty. So there's still, I'm pretty much a euro bear. Like I want to sell it more than buy it. Okay, so let's have a look at our charts. Let's see what we've got happening. Let's see what's happened for the week. I'll answer a lot of the questions that were emailed to me through the week. If you have questions right now, type them in and I'll answer them as well. All right, so again, remember, before I leave this page, these times are in my local time, which is Australian Eastern Standard, or other words, Sydney, Melbourne time zone. Okay, all right, let's get started. Let's start off with the Aussie dollar. All right, Aussie dollar. What a trade, guys. Have we all been capitalizing on this move? Because we've been calling this for like ever, you know. We've been catching moves like recently from about here, but we were catching moves from around there before. So did anybody catch this one? Remember I said last week, wait for a pullback, and if you get an entry, who caught this one here? This is a bread and butter trade. Rav got it. Not surprising. Anybody else? Anybody catch this one? Does anybody know what I'm pointing at? I'm pointing at an inside candle with a fractal at the top in a downtrend. So the trend is down. We've broken. You got this candle here is capturing this one. So when this candle breaks through there, it's a trade. Furthermore, if I measure this out, the trade triggered around about there where I've got the crosshair. The risk was about, let's call it 95 pips. This trade made, oh, I'm just in the wrong spot. This trade made around about 97. Give me a sec. Yeah, so we just reached, or it's about 100, depends how I measure it. I've measured it out, but basically we got to the 1-to-1 point on this trade, which means your second half of the trade is a free trade if you've got it on. Okay. Now, one thing that I will say about when you're trading in a trend, all right, eventually we're going to get a trade wrong, right? And it's going to reverse. That's what everybody's feeling. Who's thinking that eventually this thing's going to turn around and, oh, I don't want to take this trade because it's already moved so much and I might get stopped out. Who's thinking that? I want some honesty here. So I got one person, Linda. Yes. Anybody else thinking that? Ray's thinking that. Okay. Anybody else? Just two people? Greg? All right, good. All right. The fact that if you're thinking it, there's nothing wrong with that. All right, we just need more experience. Remember when we got this break over here, this big candle here, and I said this is going to be the hardest trade to take. And I sat there on a Monday and we were over here, and I said take it now if you want. And some of you, we all saw it, but not all of us took it. All right, and look how much it's moved since. Then we saw this one, this engulfing trade over here. Okay, that one, this was 2 weeks ago, and you would have got an entry onto this one. Your entry would have been, because it's an engulfing, it would have been here, right there. That's your entry. Let's measure this one out. The stop there was about 88, and it's done 149. So this trade here, let me just mark it out. There's a point to this, so just bear with me, okay? This one there hit its 1-to-1, and this one's almost has hit the 2-to-1. So if you were already in this one, well then I can understand that you're not going to enter this trade over here. But if you weren't in this one, I said let's wait for a pullback and see if we can get it, and we did. This one's also hit. So let me just point out all the trades that we've taken in the last about 5 sessions that we had. Give me 1 second. We got this one as well. This was the first one. We got this one as well. And have I missed any? Oh, and we got the big breaking one. Okay, so that's 5 trades. So if it pulls back, and we get an opportunity to get in, I'm still looking to trade downwards. Now, this is my point to this. I've already had 5 winning trades. If I get stopped out on one, am I going to care too much? All right, what do we think? Am I going to care a lot or not? Probably not. Now, if you haven't taken none of these, and this is the first trade that you take, and you get stopped out, well, it's kind of unlucky, but you've got to start somewhere, all right? For all I know, the Aussie dollar could go to 65 cents, and then you just watch everybody else take the trades, and then you never jump in. And if that's happening to you, well, then this is part of trading. It's something that you've got to work on to get around. Okay, now notice every single trade, even though they all have different amount of stops in terms of pips, the risk is identical. So if you're managing your account correctly, the risk should be identical, whether it's 2% risk per trade or whether it's you've nominated that every trade you're risking $30 or $500 or whatever the number is. All right, so let's say if I was risking, say, $100 just to make the numbers easier. So on the first trade, If I was to measure it out, when I get to 1-to-1, I always put the risk off, okay? And I'm really chasing trade of around about 2-to-1, all right? And with price action trend trading, it's very, very easily achievable, all right? Now, because I'm continuously stopping out of the trades, and then so when I get pullbacks, I'm happy to buy again. So for example, in this first trade, the trigger was there. The T1 was about, I'm just going to do it by eye. So there's my stop. So there's T1 about there, T1, and T2 hits me at around about here. Okay. However, I get a pullback and I get another entry. So if I was going to go for it, I could have entered again there and I could have got out straight there. So you can see that you get many bites at it rather than hanging on to one trade all the way through. This is a way to lock in profits, get out, and then if you see it again, you jump back in. Okay, so keep that in mind. Don't be afraid. You're gonna if you're finding that you're too afraid with this method, well then we've got to look at a different method. Okay, but trend trading is, how many times have you, every time I meet someone, they say, "What do you do?" And they say, "Oh, I trade the market," and they go, "Oh yeah, yeah, trend is your friend," but they don't know what it actually means. This is what it means. Okay, 5 trades, 5 weeks in a row. Trend is your friend. And if I see it again, guys, I'm going to hit it again. All right. So I'm calling it out again. We could be here. Last week I said, we could talk to you on Monday and we're at 72 something. And we are. We're at 72.89. All right. So next week, let's see if we can hit 70. If we get the announcements in our favor, we could be at the 70 something next week. Okay? All right, so for right now, Aussie dollar, our plan is I'm trying to sell any kind of pullback. All right? Now, some of you might already be in a trade. You still got half a trade in here, so then you're still in half a trade. How can the risk be the same if the stop loss is bigger in pips in some trades? Oh, okay, Linda. I'm gonna send. I'm gonna have to send you something to go. It's a class that I've done a while back. I'm due to do it again. It's very, very easy. Here we go. I'll try and do it very, very quickly. All right. Sorry, guys. I don't like to leave anybody behind. Let's say if my risk is $100 and I trade how much, and I'm going to risk, and it's 100 pips. Okay. That also means that I'm going to be trading $1 per pip. Everybody with me so far? Yes? Great. So now, if the risk is $100, but the stop is 50 pips, I now trade at $2 per pip. Does everybody understand that? Yep. Okay. $2 per pip is roughly 0.2 volume. Okay. And this trade over here is roughly 0.1 volume. So essentially, it's the same risk. The risk has not changed. The volume changes to adjust the risk. Okay. I'll send if anybody wants more details, send me an email and I'll find something for you. Okay. So I just don't have time to cover it any more than that. Apologies. Okay. But I think that's a super quick summary. All right, let's move on. So Aussie dollar, we're trying to sell any rallies. Euro USD. Okay, Euro USD. This was the most controversial trade that I've put on the market in a long, long time. I can tell you I reckon I received about 15 emails about this trade. Christian, you said this about the euro. Why did you buy? Why did you buy? Why did you buy? All right. So let me quickly recap why I bought. And incidentally, it was a profitable trade. Who took the trade? You can see my mark there. We bought. Linda did. Anybody else? Murphin did. Great. Good to see. All right. I did. Got stopped out at 20 pips. Oh, okay. That was a little bit on the tight side. Okay, all right, let me explain it. So if I go out to, let me zoom out of my picture, or let's go to a daily, no, let's go to a 4-hour. You can see that we had marked out this hot spot of a potential double bottom. All right, that was the first thing. Also, we picked out a perfect A, B, C, D pattern, which fell right about there. Okay, we did say for the conservative ones, you can try and find the price action entry. I didn't get one. Okay, there was no price action entry offered. It didn't come. So also I said if you really want this trade, it's the kind of trade that you got to go in and just place your stop. It can be tight, okay, but let me see when I called it, I'm pretty sure we were around about there. Let me just zoom in. I just want to see how far down we went. Somebody got stopped out. I really get upset about that. I think I got in, it was around about here, about 25, 26 pips. Okay. Normally what I like to do, because I'm risking, okay, and this is going to help you heaps, guys. When you're thinking of your stop loss as the amount of pips, we start to get, for the lack of a better word, stingy. Okay? We're trying to keep it as tight as we want because every pip costs us money. We agree with that? Who agrees with that statement? Is it just me or we're all a bit like that? All right? But if you enter your stop loss based on a predetermined risk, like our $100 risk, then what you'll find is psychologically you're able to put your stop loss in a better position. Okay, you won't be as stingy with your stop loss, meaning if I entered here, I'm comfortable to put my stop loss, say there somewhere, and still this distance is equal to $100 if that was my risk. Okay, if I put it there, it's still $100. All right, so what you'll find is when you place in your trade with a predetermined risk, you're not going to be as stingy with your stop loss. Okay, so sorry, that's a horrible word to use, but it's the best way that I can describe it right now. Okay, now, so if you got in about here, then somebody asked me, what's the profit targets? You know, what kind of profit targets can I expect with this type of trade? Now, remember the golden rule that we've developed in recent times is when you get to one is take some kind of an action, right? Everybody who's been with me for a while understands this. If you get to one, take some action. Don't let it turn into a negative trade, right? That's the first part. And then if you're doing price action or any kind of pattern type of trading, usually 2-to-1 for the second half of the trade is pretty good. If you actually hit it, the entire trade ends up being a 1.5 trade. Okay? Does everybody understand that? So based on that, let's do the numbers. So how do we work out the stop? So I'm just going to purely do it graphically here. So if I entered right there, where I've drawn that line, that's where we were, and I placed my stop, say, right there, okay, and that stop is around about, it's about 42 pips, okay. Then my T1, and I'm just going to do this visually, my T1 I think is around about there. Okay, and T2 to me looks about there. Is any disputes with that? So this is my risk. So this is T1 because this distance is equal to this distance. And then this is T2 because it's twice that distance there. It's probably a little bit, I've drawn it not exactly perfect, but are we all good with what I've basically said? So to answer your question, based on what we've developed, 1-to-1 for me is one of my golden rules. Okay, in my trading plan, it says when I get to 1-to-1, I take some action. It doesn't matter what the action is. Okay, so I don't like a trade that gets to 1-to-1 to turn into a negative trade. That's just me. It helps me psychologically. If you like that rule, feel free to use it. All right. So based on that, that's how I would have come out of that trade. All right. Alternatively, on an ABCD, the 38.2 fib retracement is actually quite a nice level. I like it. meaning if I do a leg from there to there, the 38.2 is just there. It's actually a little bit higher than what I said. A more ambitious target is the 61.8, okay, which has not been hit yet if you were going for that. All right, so but that's how I would work it. So hopefully that's answered. This was the most controversial trade I think I've ever placed, and it was a winning trade. Imagine if we lost. Oh, I feel like my head would have got ripped off, guys. But like I said, fundamentally, I still want to sell. I want to sell the euro, but technically I could not pass up that opportunity for a double reason. So what have we got this week? Let's go. I was hoping, really, really hoping. I had a setup here this morning, okay, to break down, but we've broken up. See, we've broken up. We've taken that level up, so that means I no longer have the setup. So the type of trade that I was trying to do was an inside candle trade in a downtrend, and this is the bit of the downtrend there. So what I'm going to wait for, what I hope for is I'm going to hopefully this candle maybe turns out to be something like this, and then tomorrow I get something like that, and then the next day I'm back down on it. All right, that's what I'm looking for. It's not there yet. That's the only thing that I have for you on the Euro USD. Any questions on the Euro USD? Let me just quickly scroll through because a lot of things got typed out there. I just want to see if I missed anything. No, all good. All right. GBP USD. Okay, GBP USD. Oh, this is one that's killing me. Can everybody see the trade? Do we have a trade right now? Purely based on price action in a trend. Who thinks we have a trade? Ray says yes. Phil says buy. No, that's the wrong direction. Yes, yes, engulfing, yes. And everybody agrees that it's a short? Yes. Okay. All right. The trade is this. You look at my two moving averages, they've just crossed over each other. All right. And I've got an engulfing candle set up here with the fractal over there. Now this only appeared this morning because it only appeared at the start of this candle. So in theory, I'm a seller. Okay. And I have to admit that for some reason I'm hesitating on this trade. And maybe it's because I'm inside congestion. So I'm looking for other factors. So this channel has been so nice to us, and I'm trying to figure out, do I have enough room to the bottom of the channel to take this trade? What I was really hoping, and I did tell you last week, what I was actually hoping, we got almost got a setup over here to go that way, but then it didn't happen. So that's what I was hoping for. I was hoping for a setup in that direction, but now the moving averages have crossed, and I've got a setup in the downward direction. All right. So for anybody who is having hesitation, what you need to do is you need to address that hesitation in the form of putting something down on pen and paper and put it into your trading plan. What will happen is when you get that hesitation, you refer to your trading plan and your trading plan says do X, Y, Z, so then you just go ahead and do it. And if it doesn't work out, you go back and you blame your trading plan. All right, but at least it will relieve all that tension of a hot decision in the moment. Okay, let me have a quick look. Let me just do a little bit of analysis on this one. Give me 1 second. The other thing that I'm liking about this trade is I'm starting to get this triangle down here. So this gives me more confidence in the sell. So I'm looking for extra reasons to be a seller. I'll tell you what, if I do sell, when I get to here, even though I have not reached my one-to-one, I'll be close, but it won't be my one-to-one. I'm going to take some kind of an action, okay? Because I'm afraid of a bounce off this level. All right. However, if I get to this level, if I do get down here, take out something, and then it breaks, it's a golden trade, okay? Because that is a very, very strong pattern. Does everybody understand the logic of what we're doing? Okay, all right, so I'm going to bite the bullet and I'm going to enter this. Give me 1 second. Just got to measure out my risk. So right now the risk is 100 and let's call it 100 and let's give ourselves a bit of a buffer. Remember, we're still going to take the same amount of risk. Let's call it 155 pips. Now, if you feel uncomfortable about this, don't do it. All right, what you can do is you can maybe chuck a pending order a little bit higher up to relieve a little bit of pressure. All right, so if this goes up, gets you in, and then gives you a bit more fighting, I guess, breathing space or whatever. In any case, the risk is still going to be the same. All right. So, but what if you get in a little bit higher? What it's going to enable you? It's going to enable this distance to equal this one, and you're going to be your 1-to-1 is going to hit around about here. Does everybody understand that? All right. So let's do it that way. Okay. Because I'm a little bit uncomfortable, normally I would just get in, but let's just do it that way. I'm going to get in where I've just drawn that line. Let me just measure out what I want to get in at 50, let's call it 55.60, all right, which means my stop is now going to be 120. Let's say I want to risk 20 bucks. How much is that? Can someone work it out for me? Six, 16. Okay, how much cents per pip? Is it 16 cents per pip? 16 cents per pip. So, and it's GBP, so yeah, raised pretty much on the money, about 0.1, 13 cents. So I'm gonna go 0.1. All right, here we go. I can't get half a trade out on 0.01. Sorry. I'm just thinking out loud. Give me 1 second. Here we go. Oh, I've got one click trading activated. Give me 1 second. All right. So I want to get in at 55.60. My stop, I want it at 56.80. And I'm going to place a target at 54.20. I'll adjust later, 54.20, and modify. Visually that looks okay to me, and I'm risking 120 pips at 20 cents a pip. 120 times, so I'm risking $24, a little bit more. Okay, well I'm actually risking about 30 because this is USD. I'm happy with that. Okay, does everybody understand the trade? If I get triggered, I get triggered. If I don't, well then I don't. All right, good. All right, let's move on. So we're going to try and catch this engulfing candle. We just want a little bit more of a pullback just so we feel a bit better, and it helps our 1-to-1 on the trade. Let's continue. Gold. Well, gold's gone through the floor. It's starting to stay down there. We're starting to get a bit of consolidation down here. All right. So the way I would play gold out, to be honest, is I see a little bit more of this, and then I see a further break down. That's the trade that I would be looking for. Also, if it does do that, it kind of starts to form a little bit of a flag, which also supports that type of trade. So I don't know if there's many gold traders in the room today, but that's the way that I see that one. It's the only trade. I'm not a buyer, not interested in trying to get a pullback at all. The only thing I'm interested in is to see if this flag pattern breaks out, if this little congestion shoots through, so let's put a mark on my chart. That's what I'm thinking is the trade that I would be looking for. Okay, US yen. Okay, that trade that you see on my US yen, that's my trading challenge trade. So just ignore that. What I'm looking for on the US yen, I want to try and buy. All right. Now I'm holding. I trade many accounts, but I'm holding positions on US yen for a long time. But what I'm trying to get in, if I don't have a position, what I'm trying to get is an inside candle situation with a fractal so that I can buy this. Hopefully I get the setup before Thursday. All right, because I get the feeling that Thursday could really rattle the market and give us the movement, the big movement that we're looking for. So I'm still, last week we said we were waiting for a pullback. I thought I was going to get one out of those two candles, but I did not. So I'm still looking for it. I need the market to come down and then shoot up. All right. So at the moment on the US yen, all we've got to do is wait and to see if we get the setup. It feels like it's coming. It feels like it's coming. If I was to be honest, we might get something like this, then there, and then the next day shoot up. That's what in an ideal world, that's what I would be expecting. Okay. All right. Carry on. Euro yen. Okay, Euro yen. We can place a trade right now. Can everybody see it? Can everybody see the inside candles right there? The only drama is, well, there's no drama. If we get higher than that level there, then you've got to cancel out the order. All right. Now let me explain the trade a little bit more. We're in, see that the moving averages have crossed, so we're in a downtrend, and I actually like shorting euro at the moment. So this is a trade that I feel fundamentally happy with. So if I get the setup, I'm really going to be happy, and I've got the setup. So what you've got to do is you put it a pending sell right there. Your risk, go a few pips above that. So when I say a few, remember now that we don't have to be so stringent on our pips. We can go like 10, give it a bit of room to breathe. So let's go there. There's our stop, and your T1 will be here, which is before that point. I like that. T2 puts me about there at the break. Okay, so just keep an eye out though. If we break that high, which we're flirting with right now, then the whole thing's out the window. Okay, that's the euro yen, and that's a trade you can place right now. I'm kind of running out of time, so I'll let you place it. Does everybody understand? You want me to call out the numbers? Okay, it's going to be a sell at about 135, let's call it 48. All right. And the stop will be about 136, call it 55. All right. So do your risk, how much you're willing to risk on it. In terms of pip, the risk is going to be around about 100 pips. All right. So if you want to risk $10, it's 0.01 or close enough to that. All right. That's just to give you an idea. Okay. Kiwi dollar. I thought that trade, by the way, is the trade challenge trade. So just ignore the lines. I thought we were going to get a setup there last week, and I placed my pending order, but then we broke the high, so it cancelled it out. All right. Before that break, the fractal was over there, but as soon as you break the high, the fractal disappeared and changed to that candle. So in any case, Kiwi dollar, I'm still looking for something like that. So I'm looking for an entry to shoot me down. All right, I'm looking for a price action entry with a fractal at the top to break and go downwards. All right. Last but not least, Euro Aussie. Okay, we were very, very unlucky last week with the Euro Aussie that we did not get a single setup out of that. And look at that beautiful movement, and we could not capitalize on it if we go strictly by our rules. So this channel has been holding really, really well, so I got no choice but to respect it, and I'm going to look for a trade over there. Okay, and this is the trade that I would look for. So I've got to wait, and if I do get to that level, I feel comfortable about trying to grab this trade on the down. All right, let me have a quick look on a 4-hour chart. No, there's nothing really there, guys, other than that channel is really, really nice. We just got to respect it, and let's see if we can catch something down from up there. Okay. Any questions on anything that I've covered today? Could have a middle pull down. Yeah, I don't like to trade the middle. Okay, so I'm going to wait for the fringe. Okay, I'm just trying to find trades that have a higher probability. That's all. Any other questions, guys, on anything? Let me recap what we've done. Aussie dollar. We're looking for pullbacks. Some of you may have half a position still in. The other half should have closed out. Euro USD. Euro USD. We're looking for. It's a bit weird. I don't think we're going to get it. No, sorry. We're looking for a pullback as well. So I'm looking for some kind of a price action to go back down. GBPUSD, we've placed a pending sell a little bit above the market. We're trading price action starting a downtrend inside a triangle. Gold, we're waiting to see what pans out over here, if we get some kind of a flag pattern or not. US yen, we're buyers and we're waiting for our entry. Euro yen, we can place an order right now. We've got a pending sell at about 135.48. Kiwi dollar, waiting for a pullback. Euro AUD, we're waiting to test the top of the channel. Okay, that's the summary really, really quickly. Any questions, any final questions before we wrap it up and call it a day, guys? We're all good? Okay, so let me just have a quick flick back. Okay, our Euro Yen should be out now. I've got that trade on another account. You can see there. So now, let me just quickly do this. I'll just measure here. That trade picked up 39 pips. So here I can put 39. And here, let me change this, plus 39 divided by the risk was 39 times 10. That trade now has locked in $15.13. This number has changed. Let me change this one to 15 and 13. And you can see, there you go. That's 20 bucks. All right. So the 10 trades that have made profit have made $199.98. Divide that by 10 equals basically 20 bucks. So we are spot on. Risking 20 to make 20 at 62.5 risk. So I'm glad that was able to finish during our class. So now that's confirmed. So we're trading after 16 completed trades. We are at 1-to-1 risk reward with a 62.5% win ratio. Okay. All right, that does it for us. I'll leave it at that. I'll see you all on Thursday, same time, 3:30. I'll see what other strategy I can dig out, ones that are doing quite well in the market at the moment. So I'll dig something up for us. Keep your questions coming. Send me screenshots. It's the best way to talk to me. It's the easiest way. Any questions, just email me. Have a fantastic week. See you all on Thursday. Bye for now.